Hey everyone, welcome back to another episode of The Short and Long of It. Scotty. Our Google position got assigned this past week. What's the plan moving forward with our Google position? Additionally, we're going to look into the economic calendar for this upcoming week. What kind of news do we have on tap that could affect the overall market outlook? As well as we're going to look into our long AMD position. Are we getting to that point that maybe we want to start thinking about selling cover calls? And then we're going to check into our Amazon lease position. We know the market has pulled back in the last 3 weeks or so. We're obviously down on that, but the great news is that it's a lease contract, so it doesn't expire until next March 2026. So we'll talk into the mindset when it comes to managing a long-term option contract like a lease. So with that, we're going to go ahead and jump into Google's charts. So if y'all recall, we sold the 175 cash secure put on Google. It expired 14 March, which was yesterday. And if you look at the charts here, we know that Google finished at 167.62. So I was assigned 100 shares of Google at the 175 strike. It's at 167. I've went over Google's financials maybe a month or so ago. Take a look at that video for a recap. But I feel really strongly about Google. I have no problem owning it at 167.62. This was just an overall sympathy move to the downside with the market. So I'm not too concerned about being down. I do plan on letting Google sort of retrace more towards the 180 area, 182 area before I start selling cover calls, probably targeting the strike price of 190, 195. So looking at my Schwab account here, you can actually see when I open up this Google cash secure put, it was on February 14th, so Valentine's Day. So I was assigned here actually on Thursday the 13th at the 175 strike. So my broker went ahead and purchased those shares. So I do have a cost basis of less than 175 due to me receiving the 140 premium when I initially sold the cash secure put. And you can see the cost basis reflected right here in my broker statement, 173.60. That's minus that 140 premium. So no big deal. I really believe in Google, and I'll look to start selling cover calls once it starts retracing to that 180 area. So if y'all been following along with my AMD thesis, I bought 100 shares of AMD at the 101.37 area on this here candle on the 27th of February. And I kind of just been waiting for AMD to retrace toward this mid area, this 105, 106 area, and I'll start selling cover calls around the 111, 112 area. I think the 112 area is kind of like an initial point of resistance, so I'll initially sell cover calls at the 112 area. So once it tests the 112 area, in my opinion, I think it'll sort of retrace back to the 106 area, but then I'll start looking for further out of the money cover calls. I think the 120, the 125, the 130 area will start coming to play with AMD at that point. But for now, we're just holding our AMD shares and waiting for the stock to retrace. Jumping into NVIDIA's chart, really a nice bounce this past week. This is their daily chart. You can see it really took off and it's starting to test this middle area. And this is going to be all your moving averages here, your 20, your 200, and your 50-day moving average. This could be a initial point of resistance, but we do still have our 115 cash secure put on NVIDIA. I've said it over and over again. I think the 115 area is a great place to own NVIDIA. And we've just been rolling our NVIDIA 115 cash secure put every month for premium. Jumping into Amazon's charts, you can see that it's really sold off ever since February 18th, which is basically when the rest of the market sold off, right? All the way down here to the 190 area. This was like a weekly and a monthly area that I had targeted for Amazon. I was really hoping that it was going to hold up this area. So far it has, but it obviously can go down just like any other stock. It's definitely hit that oversold point a couple times the past week, and I really think it's going to start retracing up to this 210, 220 area, but it's just a matter of being patient. We have this lease contract that doesn't expire until March 2026, so it's not like I sold it in a panic or anything like that. I just happened to buy it, at the 223 area. No big deal. It's just one of those things, like I always say, you can't time the market, you can just have time in the market and let this contract work for you. So I'm jumping into my Schwab accounts this week to show you guys that I'm actually following through with what I'm talking about on the charts, that I'm buying AMD 100 shares, that I'm selling my option contracts, that I'm buying lead contracts. I'm showing proof right here that I'm actually doing that and not just doing it through a virtual account or anything like that. And as you can see here on February 27th, I bought 100 shares of AMD at the 101.35 strike, and we're just kind of holding that. And here's my NVIDIA action. This is the most recent transactions that I've done. I rolled the 115 put to April 4th, 2025. You see it was worth 11 cents or $11 when I did roll it, and I received that premium here. So it was a nice little payout for NVIDIA, and we're just kind of letting this thing ride until April 4th. So it's still a couple weeks out. And here's my Amazon lead that I bought on the 18th of February. It was after initial pullback, but then I really started pulling back like I just covered on the charts. Bought it for $58.25. You can see here the Amazon 185 call that I did buy that expires in 2026. You can see here it's only worth about $37.50 a contract or $3,750. So yes, I am down about $2,000 on this, but still have until March 20th, 2026. So technically a year and 5 days. So we have plenty of time for this contract to recover. No, I'm not sweating it at all. It's just one of those things where the market pulled back to correction territory, right? So SPY is officially in correction territory. The QQQ's been in the correction territory for the past week. You can't time the market. You can only have time in the market. You have to do your due diligence on your positions. So when these pullbacks do happen, you don't freak out and sell for a loss, right? Speaking of the market reacting, let's go ahead and jump into the economic calendar. So looking at the economic calendar, we do have a couple newsworthy reports that are coming out right away. We have the core retail sales month over month. We're looking for an exceeds or meets expectations here of the 0.5%. This is really showing that the consumer is actually out still spending, showing that the economy is still relatively healthy. The Michigan Consumer Expectations report that was released last Friday was really forecasting out a negative outlook. So a miss on this report could send the market lower, potentially. So then on Wednesday, March 19th, we have the Fed interest rate decision. The full expectation is that the interest rates are going to stay the same. They're still going to stay paused, but they'll have that press conference following the rate decision, and that's when Jay Powell can really send the market down or up based off what he says in that press conference. And then really it's kind of light after that. So Monday and Wednesday is really the only newsworthy days. Thursday is the jobless claims. That's a weekly report that we're seeing. So just as long as nothing is drastic, if the jobless claims actually decrease, that's actually a positive. So the market might react in an upward fashion. So that'll do it for this week's episode. I covered my thought process on how to manage our new Google position. I went over our AMD long position, our cash secure put position that we still have open for NVDA, as well as I covered our Amazon lease position. And with that, the mental process on that lease position. I didn't sell it for a loss just because the market turned against me, right? It's not about timing the market, it's about time in the market. That's why you have to do your due diligence on these stocks. You have to look into their financials. You have to look into their fundamentals. That way, when the market does turn against you, you're not going to sell out of fear. You can't let social media or the news instill fear in you. You have to stay true to your process and just hold on during these market corrections. The economic calendar is kind of light this week, but if Trump comes out with more tariffs, that can send the market to the downside. That's why you saw so much volatility this past week. The market was trying to recover here now that it's in that correction territory, but it seems like every day Trump is tweeting or in a press conference talking about more tariffs, more percentage of tariffs. So just kind of hold on for the ride as the market is navigating these policies that Trump's putting out, as well as these economic reports that are coming out. So with that, be safe in the markets and y'all take care.